Good morning, everyone. This is the Accounting Trailblazers podcast, and our trailblazer today is Dan McMahan. He is the founder and managing partner of Integrated Growth Advisors. He has about 30 years of experience advising CPA firms and business owners on a large range of matters, M&A, growth, pretty much everything business. Before Dan started Integrated Growth Advisors, he was a partner at a $30 million CPA firm. See, all the advice that comes to you from him is not just as an expert, but as a practitioner himself. He is a regular and a coveted speaker on topics like strategic growth, internal succession, firm governance, and we're very, very lucky to have him. Dan, thank you so much for being a guest and welcome.
Thank you, Angela. I appreciate the opportunity to spend some time with you.
Absolutely. So let's start with your background. Tell me more about what you did before you started Integrated Growth Advisors and why you started this company.
Well, I spent about 20 years in the accounting profession, working my way up the ranks. I was a staff accountant in the audit department of a few national firms, and eventually settled into a regional firm in New England, where I was a an audit partner eventually, and I eventually became partner in charge of the sales and marketing function of the firm. So at the time, I wore a number of hats. I was still trying to be focused on client service because I think in an accounting firm, client service is at the core. It's the revenue producing element of a firm. And if I was going to take on sales and marketing as a responsibility, I didn't want to let go of my revenue producing activities. So that put a lot of strain on my available time, but I met the challenge head on and eventually learned some things when I was in charge of the sales and marketing function. Um, and then ultimately, my role culminated in our firm being acquired by an international firm. So I was with a $30 million firm, as you mentioned, $30 million regional firm in New England, and we were acquired by an international firm. And at that time, I thought I climbed the ranks of public accounting. I don't want to have to start over. And fortunately, I saw an opportunity and a door opened, and I saw the opportunity to be the founder of Integrated Growth Advisors. And my vision was to take everything that I had learned uh, in my leadership role over sales and marketing and kind of parlay that into an advisory firm where I could help other accountants and other business owners become better leaders and build stronger organizations that can sustain over time. So I was able to take everything I had been doing and parlay it into the founding of Integrated Growth Advisors. And that took place in December of 2011. So at this point in time, I've been at this for almost 14 years.
Wow. And a good time as well because accounting industry is going through so many changes right now. So we could use all the help we can get.
Absolutely. And, uh, I think back to my career at Integrated Growth Advisors. It's been about 14 years, like I say. And uh, in that time period, I had to redefine myself early on because I had stepped away from being a CPA and being an auditor. That's how my network identified with me. That's how I earned the opportunity to serve new clients. I was bringing in a lot of business to my accounting firm because I was a CPA and people understood that's what I did. And then I jumped off the plank into the wild blue ocean, and I became this business advisor overnight, literally overnight. I November 30th of 2011, I sat at my desk as a partner in the CPA firm till 5 o'clock, and the next morning woke up and founded Integrated Growth Advisors. So overnight, I changed what I was doing and I had to redefine myself. So,
That's
uh,
very unlike a CPA. CPAs are usually extremely risk averse. They like to stick to what they've been doing, what's been working. So that must have been quite a leap for you.
it was a huge leap. And I would say that I, as a person, I evolved over time, as any of us do. In my career as a CPA, becoming a CPA, I really never set out to become a CPA. I wanted to be an accountant because when I was in college, I thought debits equal credits. I go home at the end of the day and everything's in balance. You know, I felt a sense of control over my day to day stepping into a career as an accountant. And of course, the university that I went to was really heavy into pushing the CPA designation. So I thought, well, I'll go for that. And it wasn't until I had become a CPA and then I was practicing as a CPA that I started to become a different person. I was more left brain, less right brain through that process. I became a better critical thinker. In fact, I don't think I was a critical thinker in college. And through my business experience and being a CPA and having to sit in front of clients and either advocate for them or take a position and challenge them on a particular subject, I became a different person, a critical thinker. So as I evolved and I became um, the partner in the accounting firm, I wanted more. I just wanted more out of my career. And I wanted to be more of a creator and less of a historian. You know, as CPAs, we're always looking in the rearview mirror and we're documenting historically what happened in the past and validating what happened in the past. I wanted to take a shift and be more of a future focused person. And I think I bring this full circle in saying that when I started Integrated Growth Advisors, I didn't know what I was getting into. And fortunately, you talk about the challenges that we have in the industry, in the accounting industry today. I'm fortunate to have 14 years under my belt of really addressing the issues of accounting firms and other types of business owners as well head on. So I'm feeling pretty confident about the positioning that we as a firm are uh, in comparison to where the industry has come.
So I have a question. I was going through the documents you shared. I was going through your website and you talk about choices. So I'm going to read a couple of things I noted down. So you mentioned like choices and options in marketing a lot. So you said you're a trusted advisor to owners who want options. Then you say, you help business owners build companies that create choices. So that was very interesting to me. I've never heard somebody talk about choices and options. So what do you mean by that? And like, why does it really matter to me as a business owner? Like, I'm trying to understand what choices are you talking about and why do they matter to me?
That's a great question. And from the perspective of being a business owner, I'm a business owner myself. And when you're a business owner and you're fighting the day to day, you're in the weeds. And unless you have a mechanism internally or a team internally or an advisor externally to help pull you up out of the weeds, you're stuck doing the day to day, doing it every day, working in your business, not working on your business is the cliche uh, thing to say. So it's not until you can get pulled up out of the weeds that you can start to identify options that you have. And as a business owner who can look at his or her business more objectively, you're able to make decisions with a view on the horizon of where you want to take the company. And those business owners who are taking a look at the horizon and thinking about where they want to be, what they want to accomplish, they're able then to set out a strategic plan, a strategic direction to get there. And through that process, they become stronger organizations. And what we like to say is strong companies have options. Business owners of strong companies have options.
So when you say options, you mean like I get to choose what direction the business goes in, or I'm just going to talk more from the perspective of a CPA firm owner. So as a CPA firm owner, if I'm working on the business and not in the business, I have just more control over where the firm goes and what my life is. I'm trying to understand when you say choices, like give me an example in terms of like a CPA firm.
That's a great question, and I will say this: I had my 20-plus year career in accounting, and it was successful. I reached the level of partner, and I became responsible for a business unit within the accounting firm. So I had a successful career, but there's not a day that went by in my career as an accountant that was easy. I was always stepping outside my comfort zone. I was always doing something that was different from a day-to-day perspective. So that was challenging. But the hours, the grind was very difficult. And what I see with a lot of accountants, particularly that come from my generation and prior, they're more accustomed, they're married to the grind. And when you're stuck in the grind, you don't really have options. And sometimes you think, well, I'm just an accounting firm, or I'm just administering or overseeing an accounting practice, which is different from a business. I'm an expert in the discipline of accounting. I don't have a business. I don't have an asset that I can someday sell. That's sort of the mindset that goes through accountants' minds. And I think it goes through the minds of a lot of people in professional services. So in order to achieve options, you need to kind of pause, reflect, think about what are the things that you do different as a business, and can you capitalize on those elements? Um, One example might be that you've got a process around business development, or you have a process around internal governance and accountability of your people, and your people are accustomed to that. When you go out on the market to eventually sell that firm, buyers are going to take note that this is a value, this is an intangible value element of this business, that we're getting a workforce that's accustomed to being held accountable, as opposed to the wild west of some accounting firms where people just do whatever they want to do as long as they get their billable hours in.
Mm, so you brought up some really good points. You talked a couple of times. You mentioned M&A for accounting firms. If they want to sell, they need to create an asset. So where do most accounting firms mess up right now? Like when they are trying to sell, like what are they not doing right? Because I've had a conversation with a few brokers, and when they say that there's very few accounting firms that are sale ready, right? So I think that's what we are trying to say, that if I don't have options, my firm isn't sale ready. So tell me more about like if I'm looking to sell my firm, like what are some things I should be doing? What are some things that most firm owners overlook?
Yeah, and to clarify, if I'm not sale ready, I don't have options. That's the position of the
Interesting.
business owner. If I'm not sale ready today, I don't have options. And to answer your question, I need to answer it in the frame of
Absolutely.
the size of accounting firms. So when we look at a firm like BDO, they just did an ESOP in the past year. That's a big transition. That was monumental in the accounting profession. Nobody had ever really done that, to my knowledge. They were pioneers and got a lot of good press out of it. They were able to transition ownership through an ESOP. The larger firms they're sustainable and transferable. They have the infrastructure to be able to sustain into the future and transfer to their next generation of owners. So to answer your question, I would go and look at firms below 10 million and whether or not they're sale ready. So firms that are below 10 million that are not sale ready, they don't have their ducks in a row. That's one way to say it. Um, they they don't have an internal governance structure. There's no way that people are communicated with and held accountable. They lack strategic direction. They don't have a clear handle on their service offerings. They're more focused on old school compliance versus new school advisory. And maybe they don't have the infrastructure or the commitment to develop their people. So we see a lot of these firms that will have um, good people, certainly good people that are capable of performing accounting and auditing and taxation related tasks. But maybe it's a place where somebody at the end of their career decided to go and hang their hat and just wait out the end of their career. That's fine. And there's a place for anybody like that. But when a firm has a conglomeration of people like that, they're not vibrant, they're not on the move, they're not leaning forward. And what we like to see is a firm that's actually got it figured out, that's leaning forward into the future. They're forward looking, and they they're they're actually trying to accomplish something other than just selling their firm. They're pursuing strategic direction. It's kind of counterintuitive a little bit. You think you're going to sell your firm, so why do I have to invest in anything within the firm? But the buyers are going to see a firm that's got a lot of capability and cultural commitment to achieving strategic objectives. They're going to view a firm like that a lot differently.
It makes so much sense. Like from everything I read, I talk to people about it. You're saying makes sense. So, what percentage of accounting firms under 10 million do you feel are sale ready? Do you feel have options right now?
Well, it's good, Anshul, that you phrased the question in how I feel because I don't have specific data on this. But I get the sense that firms under 10 million, whether or not they're sale ready, um, I would say probably at least half of them, possibly more. Uh, and a lot is going on right now with the disruption in the industry, with private equity coming in. Private equity is going to look at firms that maybe have this capability or have a workforce that's coachable or can be worked with, and they're going to favor a firm like that over a firm that has 50 people going in a lot of different directions. So, one of the things that we do, we're real heavy on making sure that there's clear mission, vision, and values in a firm, and that people are able to kind of swim with the current. I'm speaking a lot of cliche, but it's truly what I'm
I
trying to
mean,
say
it's
is
true. Yeah.
people are swimming with the current, and uh, leadership is respected and out in front of people. Leadership is not chasing the staff from behind. They're actually getting people to migrate in a certain direction for a reason because they have a purpose. So I think firms like that are more sale ready, but we're finding a lot of the firms that we talk to aren't sale ready, and and they don't even identify with being not sale ready.
That is so interesting, right? So there's two things. Like, even if half of the firms are not sale ready, that's like a humongous number, right? Think about there's like 46,000 firms, not including solo practitioners and other financial advisory firms that are not, they don't quite fit the definition of CPA firms. And if half of them are not sale ready, I mean, no wonder private equity and investors are coming in, buying those up for cents on the dollar. And it's just a wasted opportunity. And
Yeah,
the
it
second
certainly
thing
is.
you said was people just don't know that they're not that they don't have options. They still live under some kind of illusion that they're still doing like great. And that brings me to something you said, that it is important to identify for a CPA firm or a business owner when they've outgrown the current leadership model, right? So tell me more about that. Like, what do you mean that we've outgrown the current leadership model? And how do I recognize that as a firm owner?
Yeah. The current leadership model it is subjective from firm to firm. But if I were to speak to this from the perspective of the partnership model that
Hmm.
that's been in existence for a long period of time, maybe since the inception of this industry, uh, and a lot of firms are shifting towards a corporate model. A corporate model has a CEO. The corporate model has accountability at the partner level, so at the executive director or the VP level. Uh, a partnership model has a managing partner, and somebody who's very wise in this industry once said to me, um, "Dan, you're working with managing partners to help them control their partnership group. That's just not possible." And I said, "Well, why is that?" And he said, "Because partners can't be managed. It's a fact of life. Partners cannot be managed." So you see this a lot in the old model where uh, partners reach the level of partnership. It's almost like a sense of tenure, and they do whatever they want. They disappear. They're on the golf course. They're on their boat. They're still producing revenue and billing and collecting and doing the things that they're measured against doing. What gets measured gets done, but they're not committed to the business the way that somebody in a corporate structure would be. So the current model, the current ownership model that the industry is moving towards, um, kind of rapidly, is the corporate model, and because of that, we've created our own internal corporate governance model for private companies, and in particular for accounting firms.
Okay. That makes sense. And I feel like as more firms embrace the corporate model, like just by the process of transition, they're going to start becoming more sale ready. They'll start becoming just better at governance and everything that you've talked about.
Yeah, governance is a word that when I decided to sort of specialize in it, nobody wanted to talk to me about governance. Um, it's like the leader of the firm doesn't want to talk about governance because that means the leader of the firm needs to be held to a standard of governance.
Yep.
But in a corporate model, in a private equity model, you've got a CEO, you've got somebody who's accountable to a higher authority, and that's governance, where you have a board of directors and you have leadership that's accountable up to the board of directors. But then where do you go from there? You have to deploy your policies down into the organization. So from a strategic perspective and an accountability perspective at the leadership level, they're accountable to a board of directors. Um, but then driving it down throughout the organization is tactical. How do we tactically make this strategy happen? And a lot of people in this industry have resisted the concept of governance. And I want to say one more thing about that. The AICPA recently came out with like a pretty strong, earth-shattering um, article with I wouldn't say it's authoritative guidance, but it does come out of the private company practice section of the AICPA that the new model for an accounting firm is a business model that has a strategic direction. It's got governance. It has strategically chosen and deployed service offerings that are future ready, not compliance of the past. The fourth pillar is technology, and the fifth pillar, which I know you're near and dear to, Anshul, is culture and talent. So those are the five pillars that the AICPA suggests accounting firms need to shift their business model to. And those pillars align with more of a corporate model. It's the new model, as you say.
Yep. Yep. Absolutely. I also want to talk about succession. I mean, I'm sure you read these articles that there's a silver tsunami coming. That 75% of accountants are going to retire in the next decade or so. Like, are CPA firms thinking about succession like in the way they should? Are they missing something? Because I hear like crazy stories about accountants just retiring and closing up shop. And as a business person, when I look at that, I was like, that's just such a waste of something that you've built, something of value. What are your thoughts on succession and CPA firms?
Yeah, I think to go further on what you said, it's a waste of something that you deserve as an owner to monetize, but more so, it's disrespectful to the stakeholders that helped get you there. And the stakeholders are the clients. You close up shop. What are the clients to do?
Yeah,
You didn't take care of your clients. And in this industry, one thing I learned as I progressed up to partner, I didn't become a partner because I was the smartest guy in the firm. I'm not going to say I was the dumbest guy in the firm, but maybe some people would. But I was not the smartest guy in the firm, but I understood something, and it was taught to me by a mentor that I worked closely with. If you look out for your clients will look out for you. And that's sort of the golden rule of client service because the clients are paying the bills and driving the revenue to the firm. So if you're if you're going to close up shop and simply just turn the lights off and go home at the end of the day, you're leaving clients unserved, you're leaving staff unattended to, and there are other stakeholders that relied on you within the industry. So it's difficult to see that. So you ask, what are my thoughts on succession in the industry? Um, I think every year that passes, a different challenge percolates to the top. And I think right now we're seeing a convergence of staffing shortages, um, the redefinition of the accounting firm model, um, trying to drive partner unity. It's always been a top issue of managing partners and CEOs, but it's not on the top because there's so many issues that need to be dealt with. We're seeing a lot of uh, different types of clients cascading down from the larger firms to the next tier to the next tier, and then next thing you know, you've got a practitioner who maybe did $1 million in revenues over the years, and all of a sudden they're doing 2.5 million because they picked up everybody's 1040 that nobody else wanted to do. And there's a reason that the larger firms chose not to do those 1040s. Part of it's because it's a grind and it's tough on the people. The other reason is that those are the most susceptible to technology advances in the future. So if you can shift your model proactively, you're in a better position. So, um, so succession is still a very high uh, item on the totem pole here, but there's so many issues that the firms are dealing with. I think it gets a little bit lost in the shuffle.
I think it does. So you also mentioned that succession, you talk about succession as a process, right? What do you mean by that? Like, what does that look like?
Well, when a business owner approaches the sale of their business, they're very much looking at it transactionally and they're looking at it as an event. So this is an event. I just have to get past the closing and everything's good. And then what happens is they go through a very difficult period of time through due diligence and finally closing the sale of their practice or their farm. And they get to the other side in a professional services environment, an accounting firm environment. Uh, the buyer still needs to retain the clients that you sold to them. So you're still kind of involved, or you're on the hook past the closing. So what I always advocate for is to treat anything as a process as opposed to an event. And if you can look at your succession as a process and start to commit to it say 5, even 10 years in advance of the ideal retirement age that you're looking at, you're not going to be caught in a situation where you're having life-changing experiences trying to sell your firm because you're focused on one thing, the closing date. You have to, one thing that I like to say is it's like a golf swing. You have to swing through the ball. If you swing a golf club and you stop right when the club gets to the ball, you don't get a good result. So you have to have a good backswing, which is the preparation and the planning, and you have to have good follow through, which is a strategic focus for what's going to happen after you close the sale. So
Love
that's
that
the way I look.
analogy. Yeah. And I was also thinking that if we look at it as a process, if we make all the changes you're asking us to make, it may come to a point where the firm could actually work and do well without me, where I may not have to sell it at all.
100%. That's the beauty of being prepared. That's you asked about options earlier.
Yes. Okay.
That is the position that I want my clients to be in so that they can pursue options. It's the pursuit of options. If you get your firm to be sale ready, forget about the terminology sale ready. You've actually built a sustainable and transferable firm. That means it can sustain into the future, the revenues, the relationships, the internal processes, sustainable into the future and transferable. That means the relationships are transferable. That means roles and responsibilities in the firm can be interchanged. You could bring new people in and they'd still do the transferable tasks. So a sustainable and transferable firm is a sale ready firm, but you've got options. You could actually you could position yourself as chairman of the board, and you've got maybe a CEO that reports up to you, and you're peripherally involved because you have a trusted group below you that's also supported by an internal structure and process. You have options.
I love that. I absolutely love that. So I know we're running up on time. Um, as an accounting firm owner, you mentioned there's just so much going on. There's increasing workloads. There's a talent crunch. Technology is coming up. There's private equity. There's M&A. I should be thinking about succession. So, like, how do I get started in the right direction? Like, and how can you help me get started? Because I just right now, even looking at all of this, it just feels overwhelming. So, like, as an accounting firm owner, like, what do I do? What are like my first two or three steps? And when should I reach out to you?
I think I appreciate the question, and I think utilizing somebody that's external, whether it's myself or somebody else in the industry, uh, bringing somebody in that's external is going to be somebody who has an objective point of view. They're not emotionally tied to uh, your day to day, and they can help pull you up out of the weeds. And I would say you'd want to do this sooner rather than later. That's a very vague answer. If I were to try and put a number of years on it, you're better off taking a step forward 3 to 5 years before your ideal retirement date. But let's face it, you don't know if you're going to be terminally ill in 12 months. So I always advocate for trying to do something sooner rather than later. And if you start sooner, it's not that hard to take the first step. I think the first step is recognizing that you have a business that's probably an asset that could be monetized. And then the next step is reaching out to an advisor that can help you uh, take you down the path. Um, the sooner you start with an advisor, the more runway you have, and you can bite off little bits and pieces along the way. So it's not that difficult. And I think what an advisor would do, step number one, is take a look at the business and assess the business. What we do is we assess how sale ready the business is. We assess the strengths and weaknesses of the business in the context of building a sustainable and transferable business. That's the first step. Once you understand those strengths and weaknesses, you can pick and choose which ones you want to address and in what order, what prioritized order. And based on the cost benefit relationship that you see as the business owner, it's not as daunting as um, one might one might think, as long as you start soon enough.
I think that makes sense. I think it's just recognizing that what I have is an asset or could be an asset, that I need some work to get it to a place where it really becomes a sustainable and transferable asset. Accepting the fact that I need help and I need accountability. And then, as you said, just taking that first step. And I really like what you talked about, breaking down everything in bite sized pieces. That once you do the analysis, you'll give me that, hey, here are some things you should be working on. And then you and I get to pick that, okay, given my workload, given where I am in life, this is what I would want to uh, tackle first. And it almost feels like I don't have to wait till I get closer to retirement. Like I could start now, like even as a business owner, like I'm in my 40s, I'm far away from retirement. But like implementing those things will just help me make more money till I retire. Um, so that's my understanding of
Yeah, and Angela, I'll just add this. People in their 40s and people in their 30s, they're starting businesses today and they're envisioning their exit. 25 years ago you started a business. You went on your own to take a risk, or you went on your own because you can't work with people, whatever the case may be. And you just went out on your own. A lot of times people didn't think about the exit. People in their 30s and 40s that are starting businesses today are thinking about their exit when they start the business. And that's a huge intellectual advancement, I think.
I agree. I agree. I mean, when I talk to like peer entrepreneurs, we talk about the end game, right? Do we want to sell? Do we want to create an asset and just sort of, as you said, become a chairman, have somebody do the work once we feel like we've had enough or there's better things? So I agree. People are thinking about that. I think what we're not doing a good job of is taking real action and bringing in advisors like you early on because we feel like there's time or, as you said, we're in the weeds. So, okay, last question then. Um, any last piece of advice, anything you'd like to share with CPA firm owners? I know the situation they could be in is very different, but anything else you'd want to share about how you can help them or what they should be doing?
I would say it's not just about me. It's about anybody that surrounds the business owner. It's people like yourself that bring a strategic advantage to the table. I think it's important to have strategic direction and to understand those 5 pillars that the AICPA published in their July Journal of Accountancy magazine article. Uh, those 5 pillars, starting with strategic direction, understand where you want to go. What are you trying to accomplish? If you can really get to the truth of that, everything else is going to flow from there. You'll be able to figure it out on your own. You might not need somebody like me.
Well, Dan, thank you so much for your time. For my audience, if you are a CPA firm owner, do check out Dan McMahan and Integrated Growth Advisors. We'll include the links and his contact information in the show notes. But please do check him out. And if you have any questions about succession, M&A, growth, or how you could work with Dan, please do reach out to him. Dan, thank you so much once again for being a guest and sharing all these amazing insights.
Thank you, Angela. I really appreciate it.
Absolutely.